Yo, what's good, everybody? I just wanted to make a quick video for options trading. I get this asked all the time, how to really utilize options and maybe how to incorporate them into your own trading strategy, whether you're day trading or swing trading. I just wanted to give my 2 cents on what I do personally and sort of help you figure out what you could do in the market. So typically, one contract is, about 100 shares. That's sort of how it translates over. Is one contract is 100 shares. Take that how you will. Um, we're just gonna focus on that first, and then we'll get into strike price and expirations and all that. But what I do typically when I day trade is I don't like to look at any of the expirations simply because I'm going to be in that stock and that contract for the same day, sometimes within just a few minutes. So I technically don't really care about the expiration because I'm not going to be holding it long enough where that expiration and that time decay is really going to affect my position. With that being said, I'm more or less just using that one contract to leverage my capital. Instead of spending $100,000 on 100 shares, 200 shares, 300 shares, 500 shares, however many shares, it's so much cheaper. I day trade the SPY, the S&P 500 ETF. You could get contracts for $1.85 a piece. You could get 500 shares for like, close to $600 to $1,000 sometimes. It's a great way to leverage your capital and have that same liquidity available to you as you would be if you were to day trade a penny stock or any other thing where you're limited to the amount of money you can use, because not everybody's starting out with a $50,000 account. Some people have that luxury, most don't. A lot of people start off with a few $1,000s, and that's that. That's how I started, and I built it up and got over the PDT rule myself. But what I like to tell people, and what I like to explain to people, is that you basically are flipping the value of the contracts. Um, since your money is so leveraged, where you could really get that 100 shares for cheaper, that's something where you really get the utmost value out of your money. Your money's doing the most work for you, and that's always how I like to explain it to people, just for day trading reasons. If I'm day trading, and I don't have to worry about the expirations, I don't have to worry about the Greeks, I don't have to worry about most of that, because I'm day trading that contract, and I will be out of it within the next few minutes to an hour. I don't have to worry about the decay. Keep that in mind when you're trading and what you want to incorporate into your own trading strategy. Obviously, my reason being that I don't like to swing trade most with contracts, or maybe just 1 or 2 days, is simply because that time decay, if you guys practice in that simulator and you see how that time decay eats at your value, you it puts a ton of pressure on your contract and your trade to be right instantly. You really don't have time to let that trade set up, because that time decay will really eat at your value of the contract. Um, that's why it's tough sometimes, and it also adds extra risk. I like to keep my risk at a bare minimum. Those guys who are on my team, they know that. I'm always looking for the best risk reward situation, and sometimes swinging options overnight or on a weekly basis can be tough. That time decay really can eat at your contracts. I wanted to go into my computer here. I'll screen record this for you guys on my Thinkorswim and show you the option chain, the expirations, puts, calls, explain all of that to you, get it all organized, and really get everything figured out for yourself. But that's how I like to trade options, and I like to leverage my capital. I know everybody's different. Everybody likes to use their money for different purposes. That's something for you to figure out, and if you need help, you could always ask me. I'm very lenient with working with my team members, and anybody on the outside who's just looking to get into trading or advance their trading as well. So if you need that, link will be in the bio. Hit it up. I'll see you on the screen. All right, so here I have my Thinkorswim pulled up. Obviously, it's the weekend. The market is not open, so it's going to be a little bit of a tougher example to show you guys, but I'm just going to go over the interface. Right now, I have the SPY ETF up from Friday's 5-minute chart. Typically, when we're going into the options, you go over to the trade tab up here in the upper left-hand corner, and it'll pull up the options chain. Typically, we're going to use this Sunday as an example. Yes, the market isn't open. It's, we're just going to call it February 3rd. So we'll look at the February 4th options. Typically, when I day trade, I'm either looking for I'm looking for like the next closest day to the expiration. So, if I'm trading in February 4th, um, expirations, it gives my contracts about a day before they expire, which allows for quite a bit of volatility, and you still have that great liquidity within that contract itself. So it gives yourself a day, and really doesn't put a lot of pressure on your trade itself. Obviously, it's different if you were swing trading and you wanted to give yourself a little more time for that trade to mature. Um, you wanted to swing the stock. You could always go and pick out a different contract, but you're gonna pay for that. The longer you have on your expiration, the more the contract is gonna be. Definitely keep that in mind. You pay the premium for the longer that you have available to be right. You're paying for more time for yourself to be right. That's always how I like to think about it. So typically, if we're trading and today's the 3rd, and we're looking to trade intraday, I'd probably look at the February 4th contracts. Um, with that being said, it opens up all these strike prices, and these are all your contracts you could buy for that day. On the left side, we got the calls. The right side, we got the puts. Um, and the strike price is right down the middle. So what I typically like to do is, the SPY is trading at about 270 right now, and I'm going to use this as an example on both sides. Typically, so we'll say if I'm looking for a short setup, I think 270 is going to be a very key resistance. Um, I would most likely buy a 270 put, and buy the ask here. That brings up an order tab. You adjust your position. I usually trade with a market order, and that you just send it right through. With that being said, you're not always going to want to be, trading whatever size. It varies, so you want to get that order tab figured out, get this nice and organized where you really have this whole setup memorized for yourself, and definitely figure out and think around with what's going on in here. So I like to think of the strike price as a estimation of where you expect the either the top or maybe the bottom where your destination is going to be. Obviously, as a put, you're immediately in the money at 270. It gives yourself room. All these contracts, it doesn't really matter, in my opinion, when it comes to day trading. Um, Most of them are all pretty liquid as long as you're one or two strike prices off. So from about 269 up to about 272, it's all relatively close to this overall stock price itself. So they typically don't matter. The spreads are usually very similar. The volume is always nice, and the liquidity is always there as well, typically. Especially on the SPY. So that's a put, an example. I'm going to flip around and say a call. Say I think 270 is the bottom, and I think we have room to about 271. I'd probably buy a 271 call or a 270 call. It doesn't really matter. Whatever I feel like is, more comfortable for myself, especially working with whatever money I'm working with that day. And depending on where the rest of my account is, if it's in a swing position, if it's not, it doesn't necessarily matter. But 45 cents a contract, you have a lot of room to work with that. That's more or less how I day trade. I don't like to complicate things. I don't really worry about the expiration, like I said previously, because they're expiring the same, whatever. I'm in it from this candle and I'm out at this candle. I take advantage of those quick moves, and you'd be surprised if you follow me on Instagram. You see how fast gains accumulate, especially when you're trading options. You really get the most leverage out of your capital. It's just something to keep in mind. I hope that really organizes things for yourself going forward. Obviously, if you have any questions, always feel free to ask me. I'm very open with that. I'm very willing to work with you. So thanks for watching. I hope this helped you guys out, and the link will be in the bio to all my socials and my website. Thanks, guys.